Hey, what's up, everybody? Well, we're having a rather bloody day in the markets today. The precious metal markets, both gold and silver spot prices, are both down, and for the last couple of days, really. But all the precious metals today, big sea of red, everything is down. On this video, I will be discussing why and giving you my thoughts, my opinions about it. Please consider hitting that thumbs up button on the video and let me know your thoughts, your opinions in the comment section below. First, let's talk precious metal prices, the spot prices. Everything, like I said, is in the red. Nothing is in the green, but let's talk gold first. Gold is currently down, as I'm recording this video, 1.84% or down $43.80 to $2,335.20. Silver still hanging on to that $30, still above $30, but it is down 1.86% or down 57 cents to $30.20. Platinum is also down 1.64% or down $17 to $1,029. Palladium is also down and down by the biggest percentage, down 2.44% or down $24 to $998. And rhodium is also in the red, down 2.17% or down $100 to $5,300. Why are the precious metals, gold and silver, getting a beat down today? Let's get into it. I would like to reference two different articles that I believe is pretty important in my opinion as to why gold and silver has been down the last couple of days, and down pretty big the last couple of days in my opinion. But the first one is from Kitco News. The other one will be from Yahoo Finance. And some very interesting and strong statements coming from some Federal Reserve officials. And one of the big reasons, in my opinion, why we've been seeing gold and silver pull back over the last couple of days. But this first one from Kitco News by Ernest Hoffman. Gold prices drop as U.S. flash PMI shows improvement in manufacturing and services. The gold market fell to session lows after the latest data showed activity in both the U.S. service and manufacturing sectors improved this month. S&P Global announced on Thursday that its preliminary Purchasing Managers Index for the service sector rose to 54.8 in May, up from April's reading of 51.3. Activity in the service sector was stronger than expected as economists forecast an unchanged reading. Activity in the manufacturing sector also improved, rising to 50.9 from April's reading of 50. The gold market sold off in the minutes following the 9:45 a.m. Eastern Time release, with gold spot hitting a session low of $2,350.63 per ounce. It last traded at $2,360.39 an ounce, down 0.75% on the day. The U.S. economic upturn has accelerated again after 2 months of slower growth, with the early PMI data signaling the forecast expansion for just over 2 years in May, said Chris Williamson, chief business economist at S&P Global Market Intelligence. The data put the U.S. economy back on course for another solid GDP gain in the second quarter. Williamson did note that companies remain cautious about the economic outlook due to uncertainty over inflation and interest rates. And we're going to get into a little bit more about that inflation and, more importantly, the interest rates, why I believe is the biggest reason why gold and silver has been down the last couple of days. But we're going to get into that in just a moment. Selling price inflation has meanwhile ticked higher and continues to signal modestly above target inflation, he said. What's interesting is that the main inflationary impetus is now coming from manufacturing rather than services, meaning rate of inflation for cost and selling prices are now somewhat elevated by pre-pandemic standards in both sectors, to suggest that the final mile down to the Fed's 2% target seems elusive. All of this news just came out this morning, and why we're seeing the big yo-yo effect, so to speak, with gold and silver. Gold and silver go up big, then they come back down. And I spoke about this a couple of days ago when the markets and the economists and the reporters and the media are all trying to speculate whether or not Jerome Powell, the FOMC, is going to come to a conclusion that they will start cutting interest rates this year in 2024, whether it be in June, July, September, just before the election. Is that what they're actually going to do? Good question. I don't know. I don't have that answer. Your guess is as good as mine. But every time there seems to be some bad news for the economy, that jobs are down, growth is down, then everybody's saying, oh, there it is. There it is. They're going to start cutting. There's the proof, there's the evidence that they are going to cut rates sometime this year in 2024, whether it's once, twice, maybe even 3 times. Then you get news like this. Then you also get what the Federal Reserve said yesterday, and I believe that's also very important as to why the metals are not just down today. As I'm recording this video, what will metals be doing once I edit this video and finally publish this video? Maybe silver and gold will be up at the end of the day. I don't know. But let's discuss what happened yesterday, because this, I believe, is also very important. So today we had the PMI data showing improvements in manufacturing and services. Well, yesterday, this is coming from Yahoo Finance, it says some Fed officials willing to raise rates if needed. And this was coming from Federal Reserve meeting minutes. This is why we're seeing this yo-yo effect, so to speak. Those are my words, yo-yo, where we'll see spot price go up multiple days in a row for gold and silver. We saw gold many times, but even just a couple of days ago where gold hit its all-time high yet again. Silver we saw go past $32 per ounce, and it all comes based off of speculation from the economists, from the press, from reporters speculating, hey, we're seeing the economy doing not so good. We're seeing jobs come back down. We're seeing unemployment rise. So that means the Federal Reserve is going to start cutting this year. Maybe once, maybe twice, maybe 3 times. Then we see the run up in gold and silver spot prices. But then we see data that possibly suggests the exact opposite. And then we get the Federal Reserve that gives us this juicy piece right here. So this comes from Jennifer Schoenberger, senior reporter, Yahoo Finance. Federal Reserve officials said at their last policy meeting that rates would likely stay higher for longer. Now, this is not the first time we're hearing that higher for longer. Jerome Powell has been saying this at many, have I said many meetings, higher for longer if inflation readings continued to disappoint, while some policymakers discussed their willingness to raise rates if needed. So just a few days ago, last week, couple weeks ago, we were hearing about how rates were going to be cut at least once, if not multiple times this year in 2024. Then members of the Federal Reserve speak, and they're talking about higher for longer and the possibility. Now, how much of a possibility is it? I don't know. Let me know your thoughts about it in the comment section below. But the possibility of not just cutting interest rates, but now we're hearing once again the higher for longer and the possibility of raising rates yet again. This is why we see, in my opinion, the yo-yo where gold and silver will go up, go on a hot streak for multiple days, where gold hits a all-time high yet again like it did a couple of days ago. I reported it here, right here on this channel. We'll see silver go over past $32 per ounce spot price like we did a couple of days ago. I reported that on this channel as well, and I also posed that question to you in the comment section below. How long will silver stay over $32 or even stay over $30, or will we see that great pullback? And over the last couple of days, we have been seeing somewhat of a pullback, mainly, in my opinion, because of what the Federal Reserve said. The article goes on to say various participants mentioned a willingness to tighten policy further should risk to inflation materialize in a way that such an action became appropriate. According to the minutes of the latest meeting, which took place April 30th and May 1st. So the meeting wasn't actually yesterday, but this is when the Fed minutes was released, was yesterday from that meeting that took place on April 30th and May 1st. Stocks slipped from record highs after the minutes were released. Higher for longer is the official mantra. Now, that's been the official mantra from the Federal Reserve for quite a long time. I talk about it all the time on this channel, spoke about it a little while ago on this video, but it says higher for longer is the official mantra, as the Fed officially acknowledged that inflation is staying more sticky than they would have liked, said Chris Zaccarelli, Chief Investment Officer for Independent Advisor Alliance. And then they have this little part in quotes, I believe, coming from Chris. Although they wanted to cut rates, they are not going to be able to do that in the near future. And that's why, in my opinion, we've been seeing gold and silver come back down the last couple of days. The complete opposite reason of why we saw gold hit another all-time high and silver surpass $32 per ounce spot price, because back then we were being told, oh, there it is, the Federal Reserve is going to start cutting. They have a reason to start cutting, and now we're being told, well, not so fast, because PMI data came out and it was showing stronger than expected. And then you have these minutes come out from some Federal Reserve participants. Some say higher for longer. Others are saying raise rates. We may have to raise rates if the data shows that we need to do so. What do I think we're going to see next? I think we're going to see a lot of the same. I think we'll see some economists, some so-called experts, reporters come out and say, oh, the Federal Reserve, they're going to start cutting. They will start cutting maybe in June, maybe in July, maybe in September, but definitely before November, and definitely this year in 2024, while others will come out and say, like from these Fed minutes, and then you have reporters based on those Federal Reserve minutes talking about, or Federal Reserve meeting minutes that talk about, well, inflation is still super sticky and we may need to keep interest rates higher for longer. By the way, what Jerome Powell's been saying for quite a long time. Or not just higher for longer, but we may need to raise rates even higher. Will they actually raise rates before they start cutting? I don't know. I don't have the answer to that. Probably unlikely in my opinion. However, this is not the first time that one of these FOMC members or Federal Reserve members suggested that they may need to raise rates before the cutting starts. Let me know your thoughts in the comment section below about everything that I spoke about on this video. The PMI stronger than expected, what some of these Federal Reserve members said about the possibility of raising interest rates and higher for longer, although that higher for longer is what Jerome Powell's been saying for the last 2 years. Some choose to believe it, others choose not to believe it. Let me know what you believe in that comment section below. Let me know about the silver, gold, all the precious metal prices being down across the board today. I do appreciate everybody for taking time out of your day to watch this video. I do hope you found this video enjoyable and informative. Please like, comment, subscribe, share, and I'll talk to everybody on my next video. Thanks a lot, everyone.